Hello traders, welcome back. In this video we're gonna have a weekly review of EU and GU and study the potential trades that the market has offered us. But first make sure you subscribe and hit the notification bell so you can never miss an update. Also I'm offering one-on-one sessions to help you achieve the profitability based on your needs, whether it is technically or mentally, so check my link in the description below. Without any further ado, let's dive right in. On my Telegram channel, we have been calling the move that EU is going to be bullish right here, like this trade here. That price has dropped to a discount level. Then price has went higher, taking the London's high, and price it did continue bullish more than that. And yeah, the next day during CPI news, I was explaining why this trade it is a win from a technical analysis point of view, but it's a loss from a risk management point of view. And if you want to take this trade, it's better to have a bigger stop loss. I was all explaining that in my Telegram channel. So join in, it's free, guys. Yeah, so we see that the US dollar has been bearish since it filled this fair value gap here, this weekly fair value gap. If we check the weekly fair value gap, we see that price has filled this weekly fair value gap and closed as an outside candle. It took the high and then it took this low, so it's been bearish here, confirming bearishness that the next week we're gonna have an expansion lower, taking the sell side liquidity below these equal lows. Yeah, I yeah, on the daily time frame, since price has taken this low here, this is our confirmation. We have been, this is the confirmation of bearishness, right? That price it's gonna check these lows, then it's gonna check these lows here. This is where, this is the confirmation, and this now has become our invalidation point. I mean by that, if price took the give me a second, if price took this low here, this low here, then maybe find some support on this daily order block and took this high, we're going to be bullish targeting this highs here. So this is our invalidation point. So I'm going to be bearish once price took this low, looking for bearish prices. But if price retrace taking this high here, I'm going to shift my bias to bullishness, because it would confirm that price is still bullish from this range here, from this low to this high. This is for me at that time was a lowest probability, and we see that price has followed to higher probability scenario where price is gonna drop lower, taking the equal lows, since it filled the weekly level from premium, of course, of this range. From this high to this low, price has retraced to premium, then it drops lower, right? So on the 4-hour time frame, we see what we see, price has dropped, taking this low. I was waiting for a retracement somewhere here. I was waiting for a retracement in premium of this range here. That price could just retrace to this order block, maybe fill completely this fair value gap, or at least CE, maybe the breaker blocks here, then price, then look for bearish prices. But once price has shown this displacement lower, I was no longer using this range. I used the next range, this one here. But I know for sure, if price, let's assume that if price goes higher, taking this high, it doesn't mean I'm going to change my bias. It just means that price want to fill this fair value gap here in premium, then price could drop lower, something like this. But here I was expecting that the dollar could retrace to this fair value, to premium, filling this fair value gap, this 4-hour fair value gap, then drops lower, but we don't see that. But on EU, we have that retracement to discount. So when EU was retracing to its fair value gap right here, the dollar was consolidating. It shows weakness. It doesn't show any strength to go to this fair value gap. It is a confirmation that price could just go higher. and also it is an SMT between this low and this low on lower time frame, and we have this high and this high here on a higher time frame. We have an SMT, so it is a confirmation that price it is bearish, and since then that price has just kept dropping lower, checking our fair value gap. And we see on hourly chart, we see that price at Monday price has dropped lower, then Tuesday price has took this high and again has dropped lower. On Wednesday has continued lower. We have also only expansion that price it is dropping lower to check our levels, our draw on liquidity. Then at Friday, after every target has been met, Friday has been a small consolidation closing the week, right? And we see that on EU. So if we zoom out to the weekly time frame, what we see price has filled this weekly BC. We have our invalidation point level here. If price took this invalidation point, there is a higher chance it's going to take this equal lows here to fill the monthly BC. But the higher probability now is that price is going to be bullish, filling completely the 3-month CB and the weekly volume imbalance here that is nested on this weekly order block. So this is our draw on liquidity, the weekly volume imbalance with the 3-month CB. I could use this. My my drawn liquidity was this level. Where is it? So the weekly volume imbalance, it was our drawn liquidity for that week. For yeah, on the daily time frame we see. Give me a second. On the daily time frame we see that price. It took this low here. Then we have a break of market structure from premium of this range. If we use our Fibonacci level, or from discount, sorry, price has retraced to discount to optimal trade entry, then broke market structure confirming bullishness, then it went higher. Like like I said, at Tuesday I was waiting for price to fill this fair value gap right here and make the low of the week, you know, Tuesday. But we have on 4-hour time frame we have our 4-hour range, and I have been explaining in the previous videos that the monthly and weekly and the daily 4-hour sequential. So I mean by that, if the daily is bullish and the 4-hour is bullish, I'm going to be expecting bullishness from the 4-hour range, and if the 4-hour range has been broken, so the 4-hour is bearish, I'm going to be expecting bullishness from the daily range. I hope you understand this concept because it is very crucial to understand the market structure. So here at this point, I said we have the daily is bullish and the weekly is bullish. At this level from this point here, from this fair value gap right here to this fair value gap, it was a daily level. I mean by that, if price retraces to this point, we're going to be at discount of the daily range. But also we have a 4-hour bullishness, we have a 4-hour range, we have this low here. So what I'm gonna do, I'm gonna use this range first. I'm gonna look for buy entries at this discount of this range, and if price drops lower, let's assume that price drops lower to let me get rid of the magnet, and if price drops lower, checking this low, fitting the daily level, it doesn't mean I'm gonna change the buys and gonna look for sales now to check this equal lows. Yeah, no, I'm gonna keep buying. I'm gonna keep looking for buys because it is daily level. The daily IF is bullish. We have our drawn liquidity higher. So I'm gonna keep looking for buys. But if price take this low, for instance, then I'm gonna be looking for sales to check these equal lows. Maybe we're gonna have something like this checking this low, then a quick move lower, or maybe we're gonna have a retracement for me to fill in a short entry to check these equal lows. This is for me a low probability scenario. The higher probability scenario is to go higher. from this fair value gap right here. And then also, once price has filled this fair value gap and check this high, we had a new range. We have this low and this high. Price has retraced to this fair value gap, the 4-hour fair value gap with the 4-hour mitigation block. Then it went higher. We have an explosive move during CPI news. This is all in CPI news, right? On the hourly chart, what we see that Monday has dropped lower to this 1-hour fair value gap right here. Like I said, I was expecting much more retracement to discount levels, but price has just only filled this fair value gap and taken this low here. If you see it taking this low, then we have our break of market structure. Once price took this high here, I was no longer waiting for that retracement, and like I said, on 4-hour range, we used on 4-hour time frame, we used this 4-hour range to look for buys. And on 15-minute time frame, once price has break market structure on 1-hour time frame, I mean, we have this break of market structure. I look for a sell entry here to our fair value gap, then a buy entry after confirmation to go higher. It was all, talked about in this video, right? It is on my channel. So yeah, and on Wednesday we have been price has been dropping lower to our fair value gap, for our fair value gap, and during the CPI news, price has went higher. So price has retraced to this range from this low to this high here. Price has retraced to this range here to discount. You would ask why I'm using this range, right? So like I said, when the daily is bullish, the 4-hour is bullish, I'm going to use the 4-hour range. And because price is fractal, we have 4-hour bullish, and also the 1-hour time frame is bullish, so I'm using the 1-hour range. And once the 1-hour range is broken, I'm going to look for buy at 4-hour range, a discount of the 4-hour range. Then, if the 4-hour range is broken, I'm going to look for buys at the daily range if the IF is still bullish. But if the IF is bearish, I'm going to look for this as a break of market structure to look for short entries for price to drop lower, right? So during the CPI news here, I would talk about two trades. One that is the both are a win from technical analysis point of view, but one it is uh, one of them is the winner, right? Because if you, yeah, we're gonna talk about that when we get to it. But first, let's use the replay button to see how we could, trade this price action. Yeah, let's use it from Monday. Let's get rid of all of these levels. We see that price is gonna open at this as at midnight open, and we have a 1-hour fair value gap right here. Use this low here, right? At this point for me, I use the Monday candle as a confirmation where price is going. Yeah, I could look for trades, but for me, I wait. I see what is happening, or what is the how the weekly open is gonna react, where price is gonna go. Is price gonna retrace? Because if at Monday price keep retracing here or close as bearish, I'm gonna keep waiting for price to drop lower a little to go higher. But if Monday, close bullish like this, I'm gonna keep, buying the retracement. Yeah, something like this. I wait to see what price is doing. I don't trade Monday. And if I did trade Monday, or if I did find a higher probability setup, I always take it with a low risk entry. So let's say that I am risking 1%. In that entry during Monday, I'm gonna risk only 0.5% to 0.25%. Yeah, So on 15-minute time frame, we see that price has been dropping during London. The Asian range has been a consolidation. Yeah, the Asian range started at 8 p.m. New York time, but I'm using this. Give me a second. Hi guys, I'm back. Sorry for about that. I had some noises in the background that I have to deal with, but let's continue. On the weekly time frame, we see that on the 15-minute time frame, we see that your Asian range has been a consolidation starting from 8 p.m. right, or 9 or 7 p.m. right, has been a consolidation, but overall we have a consolidation right here, an accumulation. Then we're going to be expecting some kind of manipulation lower, then a break of market structure to continue higher. Then price, it still didn't tap us to our level, and also I didn't use this as a break of market structure because we are still in premium. I was expecting price to still drop to discount here. So I'm not gonna just jump in because we have this high taken. So let's buy the order block. No, I'm gonna wait for my level. Then price has continued higher, even taking this high here. It doesn't mean I'm gonna change my bias. I'm still waiting for this 1 hour fair value gap. But if price has been just expanding, I'm gonna wait for tomorrow, for Tuesday, then I'm gonna look for buy entries. Like I said, Monday is only a confirmation for me. I use it as a confirmation for where price it is heading during this week. Then price has dropped lower during New York session, taking this low here and shows a big displacement above this high. We could use this after price filling this 1 hour fair value gap. We could use this as a break of market structure, but like I said, I was waiting for discount levels, so I'm fine to miss this move. That price has continued higher. So let's go to the 1 hour time frame, and what we see price has closed as a bullish candle, as an expansion. At 4 hour time frame, we have this fair value gap right here. We have this 4 hour BC, and you see also that price has filled this 4 hour fair value gap, then went higher. On the yeah, we have this 4 hour BC right here that I'm expecting some kind of bullishness from it. So if price, I'm expecting or I'm waiting for price to have a retracement to discount, then look for buy entries. And this is what happened. Then price it took this high, then it break market structure below this low here. At 15 minutes we see that price has taken this low as a confirmation that it is gonna drop lower, and also the Asian range has been what, a consolidation. We have a manipulation above the highs, then a break of market structure lower. We are expecting London to be bearish, to drop lower to our level. Then we're going to be expecting at New York to have some kind of reversal higher. Why? Because the IF is bullish. The drawing liquidity is higher. Price has retraced to a discount level. We're going to be expecting a New York reversal. We're not going to be expecting a New York continuation lower to take this low. No, the IF is still bullish. If the IF was bearish, then I'm gonna look for a continuation lower to take this consolidation here, because this is gonna be like an accumulation manipulation distribution, but an IMD pattern, it doesn't mean it's gonna be 100% right. We don't use IMD pattern as the whole thing. We use IF. We need to know first where price it is going, and then we're gonna use this concept as a confirmations, as confluences that price is gonna go where we were expecting. right? So here at this point, I could look for an entry at 5 minute time frame, and this was my entry. Let's see. Let me, just to remember where was my entry. I guess, yeah, here at this fair value gap. I took my entry at this fair value gap right here with this breaker and order block, whatever you like to use. And my stop loss was here. I guess my stop loss was here. Let me check. I think my stop loss was here, right here. And I always target 122. So price has went to 122 here. Then price has dropped lower like this. 122, right? Why I didn't push my stop loss here? Because for me, I could push my stop loss here, but I know this is not an invalidation level. I mean by that, there is a higher chance that could price just check this highs here as a consolidation to this order block, then drops lower, right? But I know for sure if price check this high here, there is a higher chance to check this high here because there is no fair value gap above it, and we have only buy side liquidity above this high. So if price took this high, there is a higher chance to check this high. So it's better to move your stop loss here than here, because yeah, you can do this and put your stop loss here and have a lot of risk reward ratio. But for me, I prefer to have my stop loss in a logical place where we're gonna have a switch in buys. So if price it took this high here, I'm not gonna say I'm gonna switch to look for buys. Then I'm gonna see what the higher time frame first is doing. But I know for sure if price check this high, at least it's gonna check this high also. Then in our level, we see that price has been consolidating like this. Then we have a break of market structure, a liquidity, a sell side liquidity taken, then a break of market structure above this high here, and inside you can use this fair value gap right here, or we can use the, the, the next one right here. I'm gonna use the bigger one, the nearest one. That's what I'm gonna use. We're gonna enter here with my stop loss here because this low has taken this equal lows. But if price check this low, there is a higher chance to check this low. And if price do check this low, it doesn't mean I'm gonna change my bias, then look for sales. I'm gonna wait to see another confirmation that price is bullish. Don't forget that we are in bullish levels, the 4-hour BC in discount to look for buy entries. Our target is gonna be where? It's gonna be this high here, right? This is our target. But also, if we go to 15-minute time frame, we still have this range here that price should check. I mean by that, price could just went higher to premium to optional trade entry and then drop slower. Yeah, to check maybe could do something like this. Check the to optional trade entry, then drop slower to check these lows, like we said, breaking 4-hour range, then find some support on 1-hour time frame on the daily range, something like this, break of market structure to continue higher. Yeah, this is a probability that price could do that. That's why we need, even if we are targeting this high here intraday, we need to take partials at premium of this range from this low, from this high to this low. We need to take partials here, and if price check this high here, that's a confirmation that we're going to see only bullish prices by then. At this point here, we could see something like this. Yeah, it's still there, so don't forget about it. I mean, that's why even if you took your buy entry, you should do check some partials here. Me, I'm always targeting 1 to 2, so for me I'm gonna target here 1 to 2. This is my target. But if you are targeting this fair value gap right here, then if you are targeting the weekly levels, the weekly volume imbalance, it's gonna give you at least 12 hour. But don't forget to check partials. The partials are very crucial to be are very uh, yeah, you have to check partials if you want to be profitable, because there is no such thing as 100% right move, because you can be right on these moves. At least checking this high or maybe this high, then price would just check you out. And if you didn't check your partial when the market has offered money to you, you're gonna be you're gonna have a lot of emotional pain. So partial is very crucial to help your psychology also. And don't let your wins become losses, right? So price then has continued bullish from our fair value gap, the first one or the second one. For me, I could also use the second one if I used my Fibonacci level, which is below the equilibrium. Or if you want only to use the first one, that's fine, but you should know that your stop loss is gonna be here. Then price, let's do something like this. Maybe what we just continue higher. Like we said, we should have check partials as premium of this range somewhere here at optimal trade entry. Then target this high here, maybe maybe another partials here. I'm not gonna tell you how much you're gonna risk and how much you're gonna check your partials. That's your risk management plan. You know, in this channel for free, we are talking only about technical analysis. And if you wanna develop your risk management model, just message me on Telegram, and I'm gonna help you to do that. Then price on 1 hour time frame might just continue to be bullish, something like this. The next day, the next day, right? Wednesday, what we have this fair value gap right here, right? We have our range, like we said, the 1 hour range is bullish, I'm using the 1 hour range. Once the 1 hour range is broken, I'm using the 4 hour range, and so on. So I'm using now the 1 hour range. I want to see some bullishness below equilibrium, preferably during at optimal trade entry at this level and the next one. But let's see. So price has so price has expanded during Asian range, right? Yeah, we are using this range, but yeah, I don't want to see the Asian range to be taken honestly. If price take the Asian range, I'm gonna be on sidelines waiting what price it is doing. Maybe price is gonna take the low then reverse higher, but preferably I don't want to see the Asian range is taken after we have an expansion during Asian range. Then price what price did? Price has dropped lower, keep continue lower like this. Then we have our break of market structure. And if you see, price it didn't take the Asian range low as a confirmation that price is also bullish, right? On 5 minute time frame, what we see price, it took these lows here. We have a break of market structure, right here. We have a fair value gap here during London, during New York kill zone. Let's put our stop loss here. And also what we have is market maker buy model, as this is our consolidation, first consolidation, second consolidation, market reversal, and we expect some kind. This is a smart money reversal. Sometimes we call it only reversal. You know, call it what you ever want, what you want. And we have what we are expecting what some kind of bullishness taking the original consolidation highs to buy side liquidity above the original consolidation. So we have also what the market maker buy model as a confluence to be bullish. Then price during CPI news had just did something like this. It just went higher. I could sell you this is a good entry. I could sell you that I took 7R in just 30 minutes, 15 minutes candle. I could sell you this idea, but the thing is, it's not a winning trade, because during CPI news we have bigger slippage, we have bigger spread. Easily your broker could check you out here, then went higher. You see on TradingView, oh, price, it didn't check my stop loss, but on broker, you got a loss on your broker because we have bigger slippage, we have bigger spread during CPI news. So you have no edge. If you put your stop loss here thinking, oh, okay, based on my backtesting, I put a lot of on backtesting at TradingView, I always put my stop loss here at, at the high resistance liquidity run. I always do that, and and it's always a win. Then you check your broker and you find it a loss, because during CPI news we have bigger slippers. Sometimes it can go to 20 points. I mean by the 2 pips, 3 pips, or sometimes 5 pips, just for price to check you out here. So let's assume that price is here, right? So at 5 pips slippage, you're out. Price is here, and because you have 5 pips slippage, you're out. Price has taken your stop loss. So it's better if you want to trade during CPI news, don't go below 1 hour time frame. Let me tell you why. So we have this order block right here. So if you check your entry here, it's better to put your stop loss here and target the weekly level like we said, or 1 to 2. And you see in 1 hour price has given 1 to 2 R, and our target is 1 to 4. You check your partial here at first, then maybe some partials at this area of some levels of premium PD raise, then the fair value gap, the weekly level, our target, then the CE of our weekly level, then the fill completely of our weekly level, and you see we still have 10R if you put your stop loss here below this low, and this is going to be a win, and a winning trade. And price, even if you have some drawdown, price won't check you out because of slippage. So think about this if you want to trade CPI news, or don't trade at all and wait for next day for your entry. But for me, if I trade CPI news, I would push my stop loss here, not here, just because we have a slippage. And 23 pips, it's much more safe than 7 pips here, right? I did explain that on my Telegram channel, so check it out. Yeah, let's continue. On our time frame, we see that price has went to our levels. This trade has given us 12R. The next trade has given us 10R. Or how much? If we took our buy entry like we said here. with stop loss here, 3R, right? Then price has just continued during Tuesday. So at Tuesday, what we see? We see, I want to see some kind of retracement at Tuesday within this range low here. I want to see some kind of retracement to discount before buying. But it doesn't mean I'm not gonna look for a buy entry, because sometimes price could just drop here, and go higher. But I'm not gonna look for buy entries here. I'm gonna wait for this high to be taken. So if price does fill this fair value gap and take this high, then I'm gonna look for some kind of retracement for a buy entry. But here I'm not gonna look for buy entries. I prefer to buy at this fair value gap right here below it, or this one at discount of this range from this low to this high. That's where I want to ideally buy. Then we see what we see. We see price just continue higher. I mean by that, price just check the agent range low here, break market structure, then it dropped lower to this fair value, to this 15-minute order block, and went higher. At this point here, I could buy this order block right here. Yeah, because why? Because we have liquidity taken, we have first buy side liquidity, and we have another we have first break of market structure, and we have a double break of market structure, a second one. So for me this is gonna be a buy entry also. My stop loss is gonna be here, because if price take this low, there's a higher chance to take this low to drop to discount, like we said, then look for buy entries. So I'm gonna take, for if I check this trade here, this one and this one, the second one with stop loss here, I'm not gonna trade Tuesday. I'm gonna take some time off. I'm not gonna look for trades. I'm not gonna trade Friday. I'm just gonna be resting, enjoying my time, because my target has been already met. I'm still gonna be opening this trade to this level here, 26R, but it doesn't mean I didn't check my partials. I am always taking my partials. I believe I have taken the most of my partials here. At this point here, I have taken 80%, and all of this from this point, from this level here to my final target is only a 20% extra, a 20% left of this trade that is gonna give me extra money. Do you understand? That's based on my risk management model. So I'm not talking about how we're gonna take a partial, how we're gonna make money. I'm just talking about technical analysis, what to do, how to enter, what do you expect from the market. Then price had just went higher like this. If I am targeting this level, this is all during Tuesday, and during Friday it's a typical consolidation day. I mean by that, I'm not gonna look for entries. I'm gonna just, relax, do something else away from the chart, because like I said, all our target is met. So why I should, risk more for that week? So if you make 12R, 26R, 10R here, and another 5R, why would you, enter another trade during this week? And this is all only from EU. We didn't check GU. What happened? So, but here we are studying every potential trade. So if you miss this one, you still have other chances to take. Then price has just dropped lower, taking this low. Then what we see price, a break of market structure. You could enter here but like I said, I'm expecting a small consolidation day, so I want to see some kind of confirmation. Then price went higher, break this low, and we have another break of market structure at this point. Then if I enter during Friday, I'm gonna enter here at this order block. I could put my stop loss here or here. For me here is fine because it did already fill the fair value gap right here. And if price check and price has already taken liquidity below this low, and if price check once more again this low, there is a higher chance it's gonna check the London low. So my stop loss, it's fine to be here, and we have an equal highs here. That price could just check, and for me, like I said, I'm gonna check partial first above this high, like I said, then I'm gonna target this level here. Then price, after taking partial, I believe it has closed as a consolidation day. Maybe for the next week, or maybe just close the trade. You have made money. And if I trade enter this trade also because it is Friday and because we are expecting some kind of small consolidation or a reversal, I'm not gonna target. I'm not gonna risk 1%, or I'm gonna reduce my risk to 0.5% or 0.25%, right? On GU, what we see. I'm sorry guys, I'm a little tired, so I'm trying to speed little things, to speed doing this weekly review. We see in the weekly time frame price has went higher. We have some kind of retracement here, and the previous week has closed as a bullish candle. So I'm expecting this week here to be a bullish as well. Targeting what? This volume imbalance right here inside this order block. First, I'm targeting the order block to check my partial. At first, I'm targeting this level here, the CE, then the order block, then this volume imbalance. I don't say that once price it's gonna check this, fill this fair value gap, it's gonna revert. I don't say this. I'm gonna keep buying to the next level, to the next level until I have a break of market structure. Then we're gonna be selling, or maybe price could just go higher, taking this consolidation that we have here, this equal highs, the buy side liquidity, and this trendline phantom. Yeah. So like I said, price is bullish. It did fill this fair value gap right here, this weekly CB. It closed this week, has closed as contraction candle, so I'm expecting the next weeks to be an expansion, and that's what we have. And if price this week here, if price drops lower, taking this low here, price is gonna be selling to this order block, or then maybe to check this low here. So this is my invalidation point. So I want to see bullish prices, but this low should be protected, should not be broken. And we see that dash price, we have a retracement to our daily order block on the daily time frame. Then we have a break of market structure above this high. This is a confirmation to be bullish. And at Monday, we see some kind of retracement to this order block with the breaker right here and closed as a bullish candle. So the next day, I'm going to be expecting thus an expansion during Tuesday. I don't want to see price retrace to check this low here. No, I don't want to see that, because based on how Monday has closed, we have a confirmation that Monday is going to be the low of the week, and we're going to see some Tuesday to be the low of the week, or Friday. But I know for sure that Monday is going to be the low of the week. I don't want to see price drop lower taking this low. I want to see it protected also. And if price, let's assume that price has just dropped lower, breaking this low, I'm not going to be selling and say, okay, price now has shifted. No, I'm going to be on sidelines. I'm going to wait. I'm going to see what price is doing. Is price going to make a retracement, then another break of market structure? Or maybe price could just do a break of market structure higher and continue higher, it's fine. But once price check this low, I'm gonna be waiting. This is the time where I'm gonna be patient. So on 4-hour time frame, we see this range here. We see that price, we have this range, we have this low, we have this high, price has retraced to this fair value gap right here, and then went higher. If you check my weekly forecast, I have been explaining these levels here, but I was expecting price maybe to take this consolidation. You have a little consolidation here, have some sell side liquidity below this consolidation. I was expecting some kind of consolidation, and I said maybe price could do something like this during Monday. I don't trade Monday, remember, I use it as a confirmation. I said that price could do something like this, then drops lower, maybe something like this to go higher, right? From also from optimal trade entry of this low to this high, something like this. But I said also, if price check this high, I'm not expecting this low to be taken. I'm going to be expecting only bullish prices. And that's what we had. So price has break these highs here and this high. So I have a confirmation to be bullish. This is Monday candle. At Tuesday here at this point, what I would do, I would be expecting some kind of retracement to these levels here. Yeah, I would be expecting that. I would be expecting some kind of retracement to this level to optimal trade entry, or at least to the previous daily open here at this point. I would definitely be expecting that. But price what price did? And we have at the previous daily open, we have this order block, this 4-hour order block. So I would be waiting for something like this, for price to drop lower, then continue higher. But price didn't do that. It doesn't mean I'm gonna, okay, price now it is breaking market structure higher, okay, let's buy. Even if we have this, I'm not gonna enter here. I want to see some kind of confirmation, and this big expansion above this high here, that's a confirmation for me to look for a buy entry using this range here, this fair value gap, this low here, and this high here. Price has retraced during CPI news, has retraced to optimal trade entry. You put your entry here during CPI, during optimal trade entry or above the fair value gap with stop loss here 31 pips and target this high here first. It's almost 122, right? Or price has give you 122. Then we have a continuation higher. Yeah, this is my trade for GU. I don't trade GU much because sometimes I don't like the price action of it. But if I trade it, I'm not going to take any entry here. Even maybe you could find some entries on GU during Tuesday once price once price you know, if I want to trade this trade because Asian range has been consolidation, I want to see some kind of manipulation here, then look for buy entries. And maybe because of how the dollar has been performing, it didn't also retrace here, and we see EU has its retracement to our levels here at this point. What I could do, I could enter somewhere here. Price has retraced to this order block. This is a no entry for me. Then we have another break of market structure above this high. Then this is an entry for me at this fair value gap with using the optional trade entry, an entry as optional trade entry here with stop loss here. But you should understand, if price check this stop loss, it doesn't mean we have shift our bias. It just means that price it want to retrace to discount of these levels here. Or sometimes I don't trade it at all and wait for a clear price action. So for me, I could take this entry, but it's not a higher probability for me, so it's better to not take it. I'm saying just some of you, it could be a higher probability for you to enter here, but I've seen many times this price could just then drops lower, taking this agent range low to discount, because here at this point we still at premium, and my higher probability setups are always in below the equilibrium, so I'm not going to take this trade. I used to do that, but based on data I was taking losses more than buys, more than wins, so I'm no longer doing that. But here it is a confirmation for me, because it shows on a higher time frame level, on a 1 hour time frame, it shows bullishness. It shows an expansion higher above this high, and we use this range low and this high. We use this as our range of discount and premium. Then we have a retracement to discount to go higher. And if this low is taken, I'm gonna use this range here, this low, to the high. Then if this low is taken, I'm gonna use this range. Maybe I'm gonna look for some kind of short setups of this here, some kind of retracement to this point to go higher, right? But we need to see this low first to be taken to have that scenario. Otherwise, we still have this bullish scenario. And during Tuesday, we see a continuation bullish, and also the same. I want to see a Tuesday. I want to see some kind of retracement to this level, or at least to optimal trade entry here before looking for buys. But you see, it has been a very strong reaction to just continue higher. And at Friday, we have a small consolidation day to close the week. So I think I'm gonna end the video here. So thank you so much for joining me today, and just wait for my other weekly review of CAD GPY and gold. I'm gonna release it soon, and I wanna thank you for supporting me. So please subscribe and hit the notification bell so you can never miss any update. And thank you. See ya in the next video.